The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 28th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. It's time to get wonderful Wednesday underway, assuming that you have your daily outcomes well defined. My outcome for you today is to teach you how to master the tools for trading, and that includes the tools of the mind, because when we can master the tools of our mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD, swing points, Gartley patterns, and various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each day. And each of these signals and patterns are in a category of what I call tactical tools. And knowing how to use these tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. Now, this next statement is key to our strategy, and it's super important to not confuse the words failure and losing money as the same thing. So many people do that. You see, in trading and investing, our spoilage is money, much like the leftovers from Memorial Day's meal this weekend, and that undoubtedly is hitting trash cans soon, if it hasn't already. Yet most of us don't correlate that kind of waste as throwing away money. But if you stop for a moment to think about it, it's really one and the same. And in trading, as long as you use stops, that would be like your entire meal that you cooked, right? As long as you have a strategy, then the loss of money is nothing more than spoilage, and it's a part of your trading strategy. Of course, that is a reason that you need to understand system expectancy. System expectancy is nothing more than our performance tool, and that's really key. If you are trading and you don't understand your system expectancy, stop. You want to learn how to do that. I'll teach you how to do that. In fact, if you go sign up for my newsletter service, not trying to focus and not asking you to actually, you don't have to do that. But if you'd like to understand system expectancy, if you'd like to understand the money management tools out there, you can go test drive my newsletter service, for God's sakes, for 30 days. You put down a deposit on there. There's a 90-minute workshop. Go learn about system expectancy and all about the money piece of the game. It is critical that you understand that phase of it. So, you want to understand a performance tool. Now, today and every day, let's do what we can to think like a strategist, because strategists, they slay the tactician all day long. So let's begin our day by getting into a peak physical state out there. That means let's sit up, let's put our shoulders back right now, let's take in a deep breath of air, let it out, and let's create a strong mind. And let's go look at one of our tools to do this, the tool I usually don't do this one in the morning. I usually just save this for when I do the Masters show, Tom O'Brien show, I should say. And that is the tool that's called Become an Ant. Ants live by a 4-part belief system, a success philosophy that each of us need to live by. Belief number 1, ants never quit. You know this to be true. If an ant's headed somewhere and you try to stop it, it'll find another way. They'll climb over, they'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to go. Belief number 2, ants think winter all summer long. Now, this is a really important perspective, because summer doesn't last forever, even though it's just the beginning for us. Got to remember, it doesn't last forever. And therefore, ants, they gather their winter food in the middle of summer. Number 3, ants think summer all winter long. Now, that's even more important, because during the winter, the ants remind themselves that this winter won't last long. Tell that to the folks that were, I think it was Lake Superior. I saw some folks that were out there over the Memorial Day weekend swimming amongst the icebergs that was out there. That's pretty amazing. I do remember living up Michigan. That is a cold lake out there. But, hey, let's get back to it. Winter won't last long, and the ants, they'll say, hey, we'll soon be out of here. And the first warm day, the ants are out. And if it turns cold again, they dive back down in the earth. But as soon as it warms up, they can't wait to get out. And belief number 4, how much will an ant gather during the summer to prepare for winter? You got it. All they possibly can. This, my friends, this is the way to live. Never give up. Always look ahead. Focus on what you want. stay positive, and most importantly, do all you can do. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here. Dow futures right now up 6 points. They're trading out at 16,660. S&P futures up a quarter of a point, trading out at 1909.50. NASDAQ futures down about 2 points, trading out at 37.19. King dollar on the move this morning, up 8 pennies, trading out at $80.49. Biggest movement looks like it is in the British pound out there. Goldilocks a little flat this morning off a buck, trading out at $12.64. Silver is flat, trading out at $19.07. Light sweet crude trading out at $103.92. That's off 19 pennies right now. A quick peek across the globe, and we'll find over in Germany, the DAX is down 8 points. The FTSE is up 5. In Asia last night, Nikkei up 34 points. That's a quarter of a percent. Not a big deal out there. Hang Seng up 0.5%, up 135 points, and up 0.75% was the Shanghai. It closed out at 2146.50. Our call-in number, 877-927-6648. Give us a call, folks. We'll be happy to take a look at your stock chart, do anything that I can do for you. So where do we begin? Let's see. Let's go start by taking a look at my favorite currency pair, and by now, it's your favorite currency pair as well. So let's go take a look at the euro, Japanese yen out here. Why do we want to see what's going on? Well, I'm going to show you why we want to see what's going on. Number one, as we take a look at this chart, if you're listening on the radio, your mobile device at tfnn.mobi, we absolutely appreciate that. Remember, you can catch live stream of the show by going to the homepage of tfnn.com. Upper right-hand side, you'll see a little button, 3 little smartphone devices on that. Over on the on that upper right-hand side, click on that. The show will stream live to you, and you'll be looking at 3 different patterns here. 2 Gartley buy patterns. Actually, they're all Gartley patterns. 2 Gartley buy patterns, 1 Gartley sell pattern. That's out here. Now, the one that we're going to focus on right now is the Gartley buy pattern that is in play as we speak right now. Now, price never made it down to the 0.786 area. Of course, you know that it's really just a guideline, that 0.786 retracement. And I'm referring to the swing point of the off the low on February 4th. That was out at a price level of 136.22, up to the high that was put in here on March the 7th, out at 143.77. So from the low to the high, 0.786 retracement brings us into the price area of about 137.79. Back on May 21st, seems so long ago, 5 trading sessions ago or so, we saw price get down to 138.13. It's really pretty close. It's close enough for me to qualify for a 0.786 Gartley buy pattern. Got a little bullish engulfing candle, and I do mean little out here. First of all, the body on that trading session of May 21st, very narrow body. That means creating a bullish engulfing candle, pretty simple thing to do out here. Well, that, in fact, was accomplished on May 22nd. A little bit of ambivalence that very next trading session on May 23rd, a bit of a move higher out here on the 26th. And yesterday, more ambivalence. Right now, what we're seeing here is we're seeing a bit of a pullback. Now, if you take a look at the bottom right-hand portion of my chart, you're going to see the euro-Japanese yen. It's in the oversold condition out here. Now, each time that the euro, in fact, it's more oversold than, well, the last time it was this oversold was back here in February. Remember, our markets were making a fairly important low February 5th out there. Now, on February 5th, February 4th, as the euro-Japanese yen was making that low, it basically catapulted, and it was getting into that oversold condition. It basically catapulted out of there. It also had formed a 0.618 Gartley buy pattern. That's really the kind of move that you like to see coming off of these patterns out here. Take a look at this little, let me go ahead and change this just a bit. Oh, I didn't mean to do that, did I? Let's try to do this one here. So you can see the line coming across there. Let me get that back to blue. So we get 3 different multicolor. We like to have colors in our charts out here. Okay, great. So if we take a look at this, just as it was also making the 0.786 Gartley sell pattern, we saw some conviction within a couple trading sessions as it came off of the high. That's the high out here from March the 7th. We're not getting that here right now. Is that a concern? I was trying to come up with a funny name out there, but I can't. Let's just say it the way it is. Absolutely. Is it a concern out here? Because this currency pair, amongst anything else in the marketplace, this is the carry trade. When the carry trade fails, that's a real problem for the bulls out here. And this pattern here has not failed, but boy, it has not done as it really should do as it makes a significant bottom. If anything, remember, when you overeat and you're just like, why the heck did I have all those ribs, all those fries, and then cheesecake and a brownie to boot? and that's not to say anything about the beer out there, you pretty much don't feel like doing a whole lot, right? Other than working off that overeaten feeling. In this case here, when a market gets overbought or oversold, in this case here, oversold, the way that it does it, the way we determine how much it's had to eat out here, is if it just moves sideways, that's more bearish. If it bounces up, then really it didn't do too much. In fact, it had a little bit of the nourishment that it had as it got down to that area from an overeating standpoint. It found some energy. It was eating protein or something. Maybe it was just having a nice wheatgrass or a nice green juice, and it was like, hey, I'm ready to go work out. I'm ready to go do some somersaults. I'm ready to go do some jumping jacks. Well, we haven't seen any kind of jumping jacks at all inside the Euro-Japanese yen. When we come back, we're going to take a look at two more charts with regard to this currency pair, because this is important for you. This is important for I. We need to understand what the Euro-Japanese yen is trying to signal to us. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market out here, we've got popping to the upside. Smith and Nephew, SNN, is the ticker symbol. They closed at $80.34. Last trade firing off right in the $84 range. Stryker Corp, SYK, is the ticker symbol. They're striking to the upside. Closed at $80.36. They're trading at about $83 and a little bit of change out here. Kihu 360 Technologies, QIHU, closed at $89.98. It's trading out at $93.50 out here. Workday, WDAY, closed at $82.13. It's trading at $85.50 right now. Twitter closed at $30.51. It's trading out at $31.50. To the downside, DSW closed at $32.52, trading out at $25 and change. 3D Systems closed at $56.64. It's trading down at $53 right now. Healthcare REIT, there's a healthcare REIT, HCN is the ticker symbol. It is closed at $64.40, trading down a couple of bucks out of the $62.50 type level. Michael Kors out with earnings, I believe, after the bell, maybe before the bell. It closed at $95.74. It's trading down at $94.92 as we speak right now. Okay, back to the euro, Japanese yen. Let's go check it out, see what it's doing. Now, I switched over during the break session there to a 120-minute chart. And you're seeing some other beautiful patterns here, Gartley butterfly patterns out here. What we're focused on, I included this in this morning's newsletter, as I do each day, cover the euro, Japanese yen out there in detail. So, and I want to share with you what it was that I said in the newsletter, especially for subscribers, because the newsletter service is one element that we do. It's got a very positive expectancy, so we make money. That doesn't mean we catch every trade. You don't, anybody who catches every trade, then that's a wonderful thing. I'm not that good, but I do catch good trades, and I catch trades so that they make money. What we also do is it's an educational-based newsletter, so it's all about education. I mean, it's jam-packed with charts and information. I get emails from clients all the time, work with them specifically on their specific stocks or part of their portfolio and help them analyze what's going on there. Now, as we take a look at this stock chart here this morning, this is what was drawn this morning. I had shown that the euro-Japanese yen, is really at kind of a little precipice at an important point today to help communicate to us what's going on inside the market. Now, the yellow pattern that you're seeing out here, it is a nice Gartley buy pattern. It's the first Gartley buy pattern off of that low. Remember in the daily chart, we were taking a look at that 0.786 Gartley buy. Well, this is the low that was made back here. This is 9 o'clock in the morning on May 21st. Now I've just switched down to a 120-minute chart out here. However, as it was forming this little Gartley buy, that was taking place here this morning at about 5 a.m. That was making that Gartley buy pattern. It was moving into a wide-ranging bar. That is not what you like to see coming in any pattern out there. In fact, the very next session, all price did was move sideways. What I said inside the newsletter was the likely outcome here was we were going to see this pattern fail, and price was going to move down to about the 138.39 range. 138.39. Now, as we were coming on the air at 9 o'clock this morning, what it got down to was 138.40. I'd have to say it's pretty close to 138.39. I have to say it's really close. It's trading at 138.41 right now. Now, here's the deal. I expected it to fail. What I didn't expect was for it to fail and move down with a wide-ranging bar. So if I write in that newsletter again today, we can see it's moving right now on the 120-minute basis, moving into the oversold condition out here. I would have to say, coming in there with a wide-ranging bar, it's more likely now what it's going to do here is that 0.78. Now, what I often say, because it's true, this is what I know to be true, when a 0.786 Gartley buy or sell pattern fails, turns into a butterfly. Just because price hit this 138.39, that's a tactical thing. I was able to, from a technician standpoint, from a tactical standpoint, be able to say a failure here, we're likely going to see price get down to that 138.39 level. That doesn't qualify as yet being a 0.786 Gartley buy pattern. That's what I call a potential pattern out here. It's not a pattern until we see some kind of reversal out there. Otherwise, it's just a measuring tool of where you expect price to likely go to. Now, what I expect coming in here with a wide-ranging bar, I expect we're going to see some pressure in the markets here this morning, because the markets tend to follow this currency pair. Now, not tick for tick. I wish it were that easy. Boy, do I wish it were that easy. I'd be a genius if it were that easy, and I probably wouldn't have shared the Euro-Japanese yen with as many people. It's a directional indicator out there, because that would be just a simple gold mine. So my expectation is that we'll see price move down and test those lows again. That's the May 21st low, right around the 138.13. That's the level that we want to be paying attention to. And we want to be paying attention to it for one specific reason. I'm going to switch over here as quickly as I can before we get off for this break here. It's right here. This is the big chart. This is the correlation chart out here. And this shows us that it is the euro-yen that wins the battle between the bulls and the bears. And right now, even though our markets are making higher highs, this euro-yen is not. And that is something to think about. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading off 16 points, trading out of 16,658. S&P off about a half a point. No big deal out there. Trading out of 1911. Composite off for it. 42.32. Russell 2000 off a couple points. Trading at 11.39. Apple down 39 cents. Microsoft off 16. Google off 15 pennies. Lead the charge. The upside, it is Qhoo 360 Technologies up $4 and change. Workday up 3.17. Stryker Corp up a couple of bucks out there. Splunk up $1.66. Leading the charge. The downside, it is DSW up $7 and change. 3D Systems off about 4. Allergan, guess I got to get the name of that right. Down 350. Valiant Pharmaceuticals off 336. Tesla off 370. Sungi Mobile down $2. Our call number 877-927-6648. Give me a call, folks. Now, I wanted to go back to this chart here real quickly, the Euro Japanese yen, and I don't mean to belabor it, but look, it is one of my roles here to certainly point out not just what the market is doing or where it's headed to, where it's likely to head to, either because of patterns or volume or swing points or what have you. But when you see divergences like this, and we got markets that are making the highs that they are, and it is super bullish. Don't get me wrong out here. The trend is your friend. The trend is up. I don't care what time frame it is you basically are looking at, other than maybe an ultra short term right now. But this here. This is the what I only wish is that this could work as a seismic, a tick for tick, some type of correlation there when there's divergence out here. But the divergence that we have right now between the Euro Japanese yen, that's at the bottom half of the chart, versus and I've got the ES Mini up at the top half of the chart. That way I don't have any kind of breaks in the chain out there. Works the same way if you want to apply it to the SPYs, I suppose, or if you want to apply it to the S&P 500, most certainly. And that's really where I do the correlation work. And look, you don't have to trade the currency pair. The thing is, when you really take a look at a stock chart from a technical standpoint, it actually doesn't matter what it is you're looking at. The chart is the chart. The candles are the candles. They do the same thing, the same patterns out there. And that's really the cool thing about technical analysis out here. Now, the top portion of the chart, there's no question that if you come back, just simply, I'm going to come back to the time frame here of about, looks like right around the April 28th type time frame. We've seen the S&P, I'm going to in fact draw another line out here. We've seen the S&P here, the ES Mini or what have you, moving off of its lows and just really motoring on higher. I'm going to go ahead and maybe make this a nice thick line. I'm going to leave it as red, but I'm just going to simply move it up here. There's no question, no denying that move that we are seeing inside the ES Mini out here. And when we take a look at that same time frame here inside of the Euro Japanese yen, there's also no denying. Let's just change colors out here. Let's make that nice and thick. There is no denying out here that this thing is in a major, there's a major divergence going on here. Now, I'm going to have to go back. I'm not going to do it during the show here, but I certainly will do it, over the course of today or early tomorrow morning and see if we've had a divergence that has run this long and what the outcome has been out here. But it's significant. It's significant enough to say these things are not correlating, and it's something that we must be paying attention to. As long as I'm in this tab here, I'm just going to take a look at the GE Dow chart out here. Now, this is a great correlation. This little tab that we're in is a number of different correlations that I take a look at, and sometimes they work, and sometimes, certainly sometimes they don't. It's the Euro-Japanese yen that works like almost all the time, and I mean almost all the time out here. Now, in the case of GE, which is the upper portion of my chart here right now, The two, they seem to be pretty correlated. Let me show you what I mean. If I come back here to the high in GE, looks like right around the May 13th time frame. So if I go from that high to where it's trading right now today, let me cut off that line there. You'll see it's got kind of a downward angle out here. And in the case of the Dow, it also has really still now it's not as steep of a downward angle. That is not as important as a mere fact that it still has that same downward angle. Now, the reason why I want to pay attention to it is inside of the Dow, GE's like the 28th weighting, something like that. And but GE is a barometer for the eventual direction of the Dow when the correlation becomes uncorrelated. There's probably a better way to say that, but that's what I'm going to have to go with at this stage because that's what I've said. So when there is a divergence, that's really how you say it, right? When there's a divergence out here, it's GE, believe it or not, even though it's the low weighting inside the actual Dow, it's one that leads the way. Well, right now they're in the same direction, which is pointed down. So there's no divergence here inside of GE and the Dow. What does that mean? Well, divergence would help us to point the way as to what the market really wants to do, and we don't see that out there. So it's the euro, Japanese yen. If we go back, and I don't mean to belabor it too much, but it really is that currency pair, and we'll see if the lows hold, assuming that it's going to go down and test the lows out there, which I believe that it will. Now, inside the Tiger's Den earlier this morning, Terry D. pointed out that today is a new moon, and if we take a look at this stock chart here, this happens to be the S&P 500. And I can take a look at each of the new and full moons out here. And so if you're watching us on Tiger TV, I've got each of the most recent ones going back to, looks like the November 2013 time frame, so that we can see when those new moons or full moons took place and what kind of impact they had on the market out here. So let's leave today's open. Let's go back to the prior one. So we had a full moon that took place here on May 14th. There was actually a little bit of a higher high that occurred on May 13th. May 14th, the market moved down for a couple days. So, in essence, the full moon worked for what? A time period of 2 days before the market made a low out there. In fact, the market, in essence, technically speaking, did what it was supposed to do, which is came back to its most recent swing point, which happened to have been the May 7th time frame. So it did complete its objective there with regard to the turn in the marketplace. If we take a look at the new moon that occurred before that, that was on April 29th. Now, the market had made a little bit lower low on the 28th out there. The 29th, the market began to move higher and did so for a couple of days. Hard to really say that had a substantial impact on the market. If you come back to the April 15th time frame, that full moon, the market was moving down into it, and that turned out to be a significant low in the market, a very significant low as we speak here at the moment. Go back prior to that, the new moon that took place on the 30th. Now, the 30th was a weekend, was a Sunday. So was it the Friday that was the low? If that's the case, you'd stick it right here. And that new moon seemed to have marked a turn in the marketplace out there. A full moon on March the 14th. Well, March the 16th. Well, the 16th was also a weekend. So if you move it back to the 14th, or you put it forward to the 17th, either way, that did mark a bit of a low for a few trading sessions out here. So, are these things working or not? Yeah, I say we need to be paying attention to the patterns out there. I'd say what works better than this lunar trading strategy out there. There's other lunar trading aspects that work really well. Is to be paying attention to the patterns, be paying attention to the euro, Japanese yen out there. Now, what may likely occur here as a turn, and I don't have the charts handy on this, but included in my newsletter each day in the expanded version out here is the study that I did that covers 300 years worth of data. I'll go ahead and punch that up on the screen here right now. I guess I could probably change the view on this, right? I can change the view. Let me see here. Let's go ahead and expand it. Let's zoom. Let me put the 100% now. I think if I hit the zoom, and let's make it 200%. Probably that was the wrong thing to do there. Let's try zooming, and let's make it 100, and let's try to make it 150%. Let's see what that looks like. Okay. 150%. That seems good enough to me. Now, here's the data for, now what we're looking at is P-index information now, planetary index, Pesavento index information out there. Now, if you use the New American Ephemeris out there, what you'll see, for those of you that have it, you can go into it and you can see the correlation, the angles of the planets, how they're all lined up, either what are major angles, 30, or 90 degrees, 180 degrees, 60, 120, 0. 180. So if we take a look at this, and you take a look at the ephemeris out there, each day, some days there might be 18 planetary alignments. Other days there could actually be 0. There have been where there's no specific angle where there's any kind of alignment whatsoever. In fact, over the course of 300 years, using the original work that Dr. Miller and Larry Pesavento had performed, for over 300 years using that original work, there were 3 times when there was nothing that had lined up. But now, what I've done is I've taken that work because I digitized everything, because I made it digital so I can access the data, apply it to charts and so forth very easily. I took 300 years worth of data. I assume 300 years times 365 days a year. You do the math on that. That kind of qualified as a pretty good sample size, and I wanted to understand. I wanted to go ahead and do the distribution of actual planetary alignments, and as long as I had it, because ephemeris time is not Eastern Standard Time out here, and the U.S. stock market's basically not the futures market, but the cash market works on what? Eastern Standard Time. So I wanted to take the data here, and I want to do the original work that Dr. Miller, that Larry had done, and I want to take a look at both on ephemeris time and Eastern Standard Time. That's really what these two different quadrants mean out here. Then I went ahead, and because the ephemeris was updated, because new planets have been found, and because the new American ephemeris is different than the one that was used when this original work was done, I had to go back and redo the distribution table out there. And when I redid the distribution table in the past, it used to be if you had 3 or less or 14 or more planets that aligned in one day on the ephemeris, that was an unusual set of circumstances that may lead to a market turn out there. Eastern Standard Time, actually, if you use the Eastern Standard Time out here, I say it had to be 2 or less or 14 or more out there. Now, if you use what we're currently looking at, the new American ephemeris, Eastern Standard or East ephemeris time, now you're dealing with 4 or less or 16 or more. Versus if you put it on the Eastern Standard Time zone, you're also dealing with 4 or less or 16 or more. Anyways, that's the basics behind that information. You can see how things are distributed and where they fall and so forth. Now, each month, each day, what's included inside the newsletter service is when there are days that we need to be paying attention to. So, yes, today is a new moon. Do I think that the full moon and new moons are really having a substantial change and impact on our trading behaviors or what have you out there? I don't know. When I take a look at the charts, I say it works for a very short period of time. Very short period of time. We go take a look at where things are trading into and what's going on. Now, if we take a look at it, this coming Friday on May 30th, we happen to have a P-index day. We've got one based on the ephemeris time. We've got one based on the old aspects, one based on the new aspects. We've got one based on Eastern Standard Time out there. So we've got, in fact, we've got across the board. I don't know why I didn't highlight this number 3 out here. I guess it's because it was 2 or less, so that's why I didn't. I probably did it right because I didn't. So it's this coming Friday that may be a time where we would see some type of change in the trend or short-term change in trend in the marketplace out there. Normally, I'm able to take a look at 3 P-index days and and show them on the screen so you can see whether or not they've had an impact. But that's really an update onto as far as what's going on up in the skies above us as we take a look at stock charts out there. In any event, so much for that. Let's go take a look at some other things. Let's go take a look at Goldilocks and silver. Let's go see what's going on inside the metals marketplace. Certainly we saw gold break through a B point yesterday of an A to B equals CD to the downside. Right now as we speak, we've got gold trading at price point of, where is it? At down $3, trading out at $12.62. Now what's interesting about gold here, let's put it up on the screen. This is the 120-minute chart for Goldilocks. Now, gold really yesterday moved into the extreme, I do mean extreme, into the extreme oversold condition of the marketplace. We should have seen a little bit more of a bounce on what we saw out here over the last 520-minute trading sessions out here. At some point in time, boy, how's that for really being a genius out here? At some point in time in the very near future, we're going to see some kind of bounce here in gold. I really thought that what we would do is we would see it take place here early this morning, because when I take a look at the daily chart, I'm going to put up the continuous contract here for the daily chart. Let me just move back here and we'll take a look at it. What you're going to see on the daily chart is you're going to see gold also moving into an sold condition. If we take a look at our 14-period relative strength indicator. So we've got a confirmed A to B equals CD to the downside, but as it also moved down to the low of that relative strength indicator out there, it's an indication to me that we should see some type of bounce out here. Now, it doesn't mean that it can't move lower. It doesn't mean that it won't go complete that 1216 to 1184-ish range out there. If you take a look at the June 28th area inside of gold, June 28th's high is 1234. It's only another $30 or so down. It ought to at least go test the highs of that. But the question is going to be, so any bounce that we do see inside of gold, recognize, and we're not seeing that as we speak here right now, recognize that it's doing nothing more than working off a very extended, on a short term as well as what's going on the daily chart, working off an overextended condition out there, in this case here, an oversold condition. Same thing really taking place inside silver, although not as dramatic. If we take a look at the daily chart for silver out here, let's put the silver on my screen. This is the daily chart. This is the continuous contract. And it did form a nice little Gartley buy pattern yesterday, no confirmation or anything. But you can see on its daily chart, it's not anywhere near as oversold as Goldilocks is. Dow's off 19, S&P is totally flat. We can go barefoot water skiing if we'd like. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back. Dow is off 23 points right now. S&P is up 87 cents. The composite off 4. Russell 2000 off about $3. NASDAQ 100 off a buck out there. Big moves in the marketplace. So, kind of covered a lot here today, this morning. Really more so some correlations, taking a look at some technical analysis tools out there just to help you with regard to navigate the markets out there. Because, you know, if you get too caught up into what others might be saying, what's on the media, and that includes me. Look, I'm just going to share with you tools that work. And so to the extent that you want to learn about technical analysis, look, if you're, no matter what stage you're at right there, go do yourself a favor, go test drive Mastering Probability. Go to the homepage at TFNN.com. Go ahead and click on my name out there. It'll take you right to it. You're putting down a little deposit. Heck, if you got Tiger dollars, it makes it real easy. But like you're putting down a deposit. Here's what I know. If you pay for something, you'll pay attention. I want you to pay attention for at least 30 days. So go test drive the service. Look, if you're going to, and it's a deposit, so it's totally refundable. So there's no risk out there. There's a great money management tool workshop, 90-minute workshop. That is worth its weight in gold out there. So go take that so that you can understand the money part of the game out here. It's really not taught by very many out there. And so that's an aspect that you really want to understand. Now, and then the other thing, that we're taking a look at, so when I just kind of summarize, I've got about 2.5 minutes or so to summarize what it is that we really talked about this morning out here. We take a look at the market. The trend is your friend, and the trend is big time upward. Monthly, daily, weekly out there. Russell 2000 is just ripping to the upside out here. Both Russell 2000 and the NASDAQ. And markets that are in full-blown bull mode, those two, lead the charge on the way up. So that's something that we want to really be paying attention to. It's not the Dow that's going to be the leader. And the Dow right now is kind of the weakest of the four out there, at least coming off of the most recent lows. Now, people talk a lot about the VIX. I hear the VIX index, and there's a lot of different ways to use these tools out here. I'm going to give you what I consider to be the easiest tool to use as the VIX. Just put a 50-day exponential moving average line on the VIX. If price is above the 50-day exponential moving average, I guarantee you that price is that it depends on your trading strategy now, but certainly from a shorter-term trading strategy, meaning daily type moves out there, when price gets above that, you're going to see carnage and damage done in the marketplace. That's the expectation, because that's what really happens. That's what has happened for years out here with regard to the VIX. That's not a way, that's not a method, that wasn't the original intent when the VIX was established out there all these years back. But it is a way that it works. Likewise, when price is below that area, it's now, and of course, when you make a turn, you're trying to sell the top tick or buy the bottom tick. When price is below it, just telling you there's a lot of liquidity. To me, it's a great liquidity gauge. It's just because when there's a lack of liquidity, that's when the market starts to dry up and move lower. When there's plenty of liquidity, doesn't matter if volume or not, the market's going to move higher. Money's got to go somewhere. It's got to chase something out there. Right now, the VIX is 1160. It's well below the 50-day exponential moving average, which is right now priced at 1337. What we also need to focus on is that Euro, Japanese yen. Look, and there's a correlation out there that has become unhinged. It says we're going to see some type of directional pullback at some point. until that thing gets to be recorrelated. Well, what we really want to focus on is what happens with regard to the Euro-Japanese yen if, in fact, it does move down and test those lows. And by breaking the low here, really, of May 21st out there, which is at 138.13, if it breaks that low, don't get your feathers too caught up here, because really it hasn't made the 0.786 retracement, that 137.80 level. 137.80 is the area for us to really focus on. So have a great Wednesday, folks. Thanks so much for joining us. I look forward to seeing you real soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.